Generally, it's that they are market leaders. Again, we're investing at the smaller end of the market in terms of size of business. So they're never going to be market leaders in large markets. What we look for are market leaders in niches. So a great example is a business called HPS, which is an outsourced provider of pharmacy services into private hospitals. So you can see by that definition, it's reasonably niche. So basically what these guys do is in private hospital settings, they will provide all of the pharmacy services, the actual pharmaceuticals themselves and the clinical services that go around that into the hospital as an outsourced service provider. And most hospitals in Australia, particularly in the private sector, have outsourced that function along with outsourcing radiology and pathology and a bunch of other ancillary services. So HPS is the market leading provider of that service in the country. So we invested in that business in 2015. We exited that investment a couple of months ago, so just over a 2-year investment. It was a very successful investment for us, and one of the key drivers of success was the fact that it started as a market leader. So it was able to win new contracts at a faster rate than its competitors. It had better buying power, it could access great talent, it could invest ahead of the curve. So all those things were a function of being a market leader. So that by far and away is one of the key criteria in terms of success. The other one is, coming back to my earlier point around the people, quality of management team, quality of shareholders and the people around the board is the other determinant of success. Where you've got a good group of people, executives and directors, and sort of industry leaders, that they typically outperform relative to the rest of the industry. The first thing we think about is, has the investment performed to plan? So are we going to actually achieve at least our target returns on that investment? The second is, what's happening in the market from an exit perspective? So is it a good time to exit, either because the trade buyers are well capitalised and looking for growth and looking for acquisitions, or is the IPO market really attractive and the window's open, so to speak, and therefore now's a good time to exit? And then the third thing that comes into it, which is the critically important thing for us, is does the business have a good, solid 3 to 5 year growth plan from now, which will ensure that we maximise the exit valuation for the asset. One of the things that can often be missed in exit processes is you need to be able to sell growth for the next buyer. The next buyer needs to be able to see how they're going to make a good return on the investment, which means we need to invest the work in laying out that growth plan for the next buyer. And if you've got a really strong, solid, defensible growth case, then that will push the valuation up. So if you get a combination of those three things sort of all aligning, which is what happened with HPS, the business has performed well, the trade buyers were interested, and other private equity funds were interested in the asset, and we had a really strong defensible growth plan of how the next owner could really grow the earnings of the business, then that for us is sort of the perfect environment to exit.